What's the most important resource that you have? If you really thought about this deeply, I think you'd come to the same conclusion that Joey and I did. It's time. In our newest book, What's Without Wall Street, the 3 Steps to Financial Freedom Through Passive Income, we talk about how are we tracking that time? What is the thing that we can do to get more of that time back?
That's right. If you've ever been listening to our podcast and thought, man, it would be amazing if I could take all the things that you guys have learned over the last 10 years and just summarize them, put them in some way to easily digest them and take action, that's what this book is all about. You're not going to want to miss it. Go to wealthwithoutwallstreet.com/new book and get your copy today.
All right, we're breaking down the concept of infinite banking and why it's so important in our lives. And if you're a beginner, you're brand new to this idea, I want you to know that this isn't our idea. This idea came from a book called Becoming Your Own Banker by Nelson Nash. It was someone that I got a chance to meet in person and several different times at different conferences across the U.S. But it wasn't until the financial markets crashed in 2008 and had me kind of palm to the sky trying to figure out what was I going to do? How is it going to help my clients have way more certainty and less of risk in their life? And I met him in January 2009 in Orlando, Florida. I heard him speak. I bought his book. If you're watching on YouTube, you see the book. This is one of the editions of the book that he wrote, Becoming Your Own Banker. I read this book cover to cover on the flight home from Orlando. And on the back of it, I recognized that this gentleman who I'd seen speak all over the U.S. lived in the same city, Birmingham, Alabama, in which I lived. And I've made it my mission to understand inside and out what this concept was and what it wasn't. And I think early on, I had a lot of mind trash of what it was, and it really wasn't that. I thought this was like this great investment idea that the insurance world had come up with to sell insurance. I thought it was this idea of, what old people do with money and didn't apply to me because I was young. I had this idea that I was smarter than everybody else because I'd been a securities advisor, a certified financial planner, and I knew what everybody didn't. That was the only reason why they was using it. That's not true at all. It had a lot more pieces to it. So I want to come to you, Eric, first. I want to talk about what is infinite banking in its simplicity, just one segment, and how it applies to you from a process.
Yeah, Russ, great question. Infinite banking to me allows for me to actually control my cash, which is so important not to give that responsibility away. I'll tell you how that feels a little bit with an example. So many times I'll travel either out of the country or either just out of my own state. And the whole time while I'm out of my own hometown, I'm in an Uber, I'm on a bus, somebody else is doing the driving. And the feeling that I get, Russ, when I finally get home and I get off that airplane or the Uber driver delivers me to back to my vehicle, and I can actually get behind my own wheel and take control of the direction I'm going, the speed I'm going, the route that I want to take, the safety that I want to apply to my drive, is just an amazing feeling that I get from doing that in a really physical sense when we think about driving. Now that I've taken control through IBC from my capital, I get to apply those same things. What direction am I going to go with my capital? How do I want to steward my capital well to make sure I get the return, the safe return that I want? What direction do I want to go? What kinds of things do I want to invest in without somebody else telling me how to do that? How safe I want to be. All of these things come into play, and the control of my cash, Russ, for me, is what IBC has changed and forever will change my family's future, and the reason why I love IBC so much.
Yeah, for somebody who just got back from flying and being in Uber cars, I can tell you, I want to be sitting in the driver's seat and ever so bored. I mean, that's just a simple example of being in a car ride for 10 minutes. You're like, well, I guess I could sit in the back seat and let them do that. And then, I get to work on something on the background. But when it comes to money, man, I was taught as a certified financial planner that it was my job to take the responsibility over all of your finances. And that was a big responsibility. And by the way, I was not equipped to be able to handle all outcomes that were going to come Hence, the reason why I stopped doing that, because I recognized the fact that I couldn't do it well, nor can the industry. I saw it firsthand, and that's why I had to leave all that behind. But man, how more important? Who's going to care more about our future than us? I love that point. How about for you, Jamie, man? We're talking about the process of infinite banking. Why is it so important?
Yeah, I mean, when I think about processes, I think about systems, right? And IBC gives me an operating system to flow my cash through most efficiently, right? Systems lead to efficiency. Let me give you an example. We were on the way to the beach last week for a quick last-minute vacation before school starts, and kids were starving, yelling from the back seat, and so we just grabbed the first thing we saw was Popeyes. I hate to admit it, we had to stop and grab some fast food, right? It probably took us 30 minutes to get through that drive-through and get our food. And once we got the food was cold. Right? I think there was one hot chicken finger. We got the wrong drink. It was just an inefficient process, an inefficient system. Vice versa, when you go to Chick-fil-A, you know that you're going to be greeted probably halfway around the building by somebody taking your order. That line is going to move super fast because the inside people are able to just focus on their system of producing the food, customer service, and getting it out the window. It's such an efficient system, right? And when it relates to IBC, and it relates to how we flow cash through our life, most people have money scattered, and I was this way, have money scattered all over the place, right? They've got multiple accounts. They've got a vacation account, a savings account, a checking account, maybe 3 or 4 of those. Maybe they got separated finances. Maybe they're putting money, flowing it towards retirement plans, whatever it is. Money's everywhere. And that leads to confusion. That leads to not understanding what we actually have available to go and work with and to do something with, right? And what happens with a confused mind? It does nothing. That nothing happens. We just kind of think we have things in place, but we never really do. And so IBC allows me to really flow cash into one efficient place to build a system and turn active income into passive income. We talked earlier about I did work a W-2 job, spent 14 years in the medical device industry, and it was a great active income. But what I knew is I wanted more for my life. I wanted to get more time with my family, and I knew I needed to build passive income. And so we have talked about here on this podcast, we have created the passive income operating system, right? The most efficient way in our minds to turn active income into passive income. And so my big takeaway is this gives me an operating system, and systems just make things more efficient.
No doubt. Well, as you're listening, if you're trying to figure out more about this and you're a visual person, go to what'swhatwallstreet.com/IBC. We actually give you access to some free webinars where we break down this in a very visual way that you can benefit, hopefully, from some of the experience of these coaches, people that have been doing this personally for a long time, but also been sharing this with lots of other people. All right, so let's come around here to the Stallion. Stallion, tell me about this process and why is it so important?
Well, I think you guys have all kind of hit on this in some way, shape, or form, but I'll add a little bit more credence to it. And for me, because it's been the biggest difference in becoming an investor, the process of infinite banking, because you're being put into position of control and not abdicating that control to somebody else, as you guys have already mentioned, it immediately forces you to start thinking, what can I do with this capital, with this cash that I now have access to that I didn't before? And I'm now in the control seat, as you guys mentioned, versus having it all it's spent all over all the places and all these different places. I now have this, and I have to steward it well. Well, what it has done for me is it said, okay, who am I as an investor? What is it that I really enjoy? What is my outcome that I'm trying to create? And you just mentioned it, Jamie, as far as turning my active income into passive income. I can look back now after having done this for 10 years or more than 10 years and saying, wow, I had an active income of over $300,000 in my W-2 job. Now turn that into $300,000 in passive income in this amount of time. And the beauty is, because Russ and I have learned this over these years, we've figured out that there's a lot of shortcuts that we could have done had we known that there was a path. And that's the beauty of this whole process. If you haven't already done this, I want to encourage you to go to wealthwithoutwallstreet.com/free call and to talk about your circumstances, your goals, and how this could possibly apply to you. Because Now that we know those shortcuts, we can apply them to you and make sure that you get there much faster than we ever did.
Well, here's the thing that you said there, Stallion, was it forced you to become a better investor. And I think one of the biggest problems that we have out there is that we've abdicated the responsibility to someone else, assuming that they know more about investing than we do, and they don't. I'm just telling you firsthand, they don't. If they were so financially successful, they would tell you about it. They would show you, right? Have them show you how well their investments are doing. Now, they'd be made a lot of money off your accounts, off the fees they charge you. But how financially successful are they? I can just tell you firsthand, working in an office where we had people that were in their 60s, 70s, and 80s, and without the check that came from the fees that they were charging, they would not be able to live their lifestyle in which they were living. They were broke. They just were. And I mean, it's sad to say, but that is more the norm. That's more the rule than the exception to the rule. Now, are there financially successful people in the financial industry? Sure there is. But that is the exception, not the rule. So forcing us to learn how to become better investors is what the infinite banking concept has done. It said that I'm going to learn when I have access to the money. I'm going to start learning all of these things. I'm going to build a system, as Jamie talked about. I'm going to put it in place. And when would you want to have to start learning how to become an investor? Today, when you're in your 40s, or when you're in your 70s? After you've retired, now you've got this huge pot of money that you've done the traditional, typical Wall Street way. And now you're having to manage it in a way that hopefully doesn't run out before you die. And you're at the biggest risk of losing it and making huge mistakes. When do you want to make mistakes? You want to be able to make mistakes when you have the ability to overcome those mistakes. So when we're forced to make mistakes now, learn how to do it in our 30s and our 40s and our 50s, then by the time we continue to grow, we get better. The more reps we get, the better we get. And I think that that's what you get whenever you're in utilizing the infinite banking concept, is you've now put yourself in a position that you've forced yourself to become a better investor. All right, now I want to differentiate for the person who's a beginner, who's hearing about this concept. You've probably heard that this also utilizes a dividend-paying whole life insurance policy. And you probably, if you're like me, right, I had financial background, but I still had little experience, little understanding of what that tool was. Let's break down the specific tool and how it's utilized and help people understand why we utilize that tool as compared to other tools. Eric, would you like to go first?
Yeah, I would love to do that. Access to cash is the secret sauce to becoming an investor and to changing your life generationally. And one of the ways that we utilize this whole life insurance product is we set up the policy, the IBC policy, with a mutual insurance company. And what that simply means, and that we only use mutual insurance companies, is that when you begin your policy, you become an owner of that insurance policy. And as an owner, you now have the right to take a loan from the insurance company anytime you want to, no questions asked. I will say they'll ask two questions. How much do you want and where do you want it sent? Also, you may want to sit down for this because this is going to be hard to believe, but it's 100% the fact. This is an unstructured loan. There are no repayment terms on this loan whatsoever. Mind-blowing, right? That's because that should you pass away with a loan outstanding, the death benefit is going to cover whatever amount of loan that you have taken out. So the insurance company really doesn't care whether you paid a loan back or not, because the death benefit is going to cover that. They already owe that to you. I have a friend, Russ, who called me yesterday, and he was equal parts excited and scared. He called me, and the first thing he said was, "Hey man, guess what? I'm 59 and a half." And for those of you who don't know, where that number doesn't make, is not ringing a bell with you, that is the date that you can finally access the money that you've been saving up for however many years, 40 years, that they've been holding that from you, lock that away from you without penalty if you've left your current employer, if it's a 401k where that money is held. But now he has access to that capital, Russ. But since he's advocated that responsibility for 40 years, his primary job now is to be an investor and is to manage that cash. And he has no idea how to do it. So now what is he left with? Fear. of running out of money.
Tribe, listen up. We're entering into the election year. This is the time where people are going to get super fearful. We're going to see businesses start to dry up. We're going to see opportunities, though, pile up for us only if we're prepared.
That's right. You get to choose right now. Will you allow this time frame to negatively affect you in your business and your investments? Or will you be prepared to take advantage of these huge opportunities that come on the backside of this because you're prepared with cash?
Let's get our house in order. If you haven't already maximized the infinite banking concept in your life, here's the chance for you to start learning. Go to wealthwithoutwallstreet.com/IBC. Take our free webinar so that you can start getting equipped with the things that you need to know so that you can take action on this looming event.
I just recognize, right, as we start talking about the infinite banking concept here, we talked about the process and how valuable the process is, but we're now going to talk about the product and what products do we use? Well, our brain instantly in this, and excuse me for jumping in here, we sometimes go advanced on this process. We think about the infinite banking process where we borrow against a life insurance policy, and we didn't even tell what the life insurance policy is. Eric, you mentioned that it's a mutual insurance company. Well, mutual means it's owned by the policy holders. The opposite would mean if it was owned by the stockholders. The stockholders would be like the AIG people, right? And if you guys remember 2008, there was a lot of people that were unhappy with what was happening, what was the people who were managing that insurance company was doing, and in essence, to try to perform for their stockholders. Well, we don't have those issues. We deal with companies that are hundreds of years old who are focused on supporting us as owners, the policyholders themselves. But these insurance policies are designed a very specific way, a way completely different than the way that I had ever been taught how to use insurance. Meaning that I was taught that insurance was where you want to get the biggest death benefit you possibly could and have the smallest amount of input, right? The smallest amount of premium. So if you're watching on YouTube, you can see this video, or like I said before, if you want to see this live, you can go to wealthwithoutwallstreet.com/IBC. We break this down in a webinar that's free to you. But whenever we set up an insurance policy, we set up an insurance policy to create the largest cash value with the smallest death benefit allowed by the IRS. Now, you're going to wonder, why is the IRS remotely interested in how much money we put in life insurance policies? It's because the cash value will grow without taxation. That's afforded under the IRS code section 7702. And we're going to break down more around this subject matter, but I want you to know is that when we're talking about a whole life policy, probably something you never bought in your life, why are we utilizing this tool, but how are we utilizing it different than probably what you had been explained before? How is this different than your Northwestern State Farm agents when they were talking to you about having a death benefit? We're talking to you about how to build up cash value in a company that you're an owner of so that you can become a better investor, so that you can create a process, like Jamie said, of turning active income into passive income. All right, so Jamie, tell me about the product, how this product differs and why it's so important for you.
So I talked earlier about kind of wanting a place for my cash, organizing the thought and the system of the finances, where my cash goes in my life. And I found this, and one of the most important parts of utilizing a specially structured dividend-paying whole life insurance contract was number one on the slide you just showed. It's the guaranteed growth, right? We work really hard to make money, to save cash, right? To save money. And what's the number one rule of once you have cash, right? Don't lose it. And so I wanted a place where I was guaranteed to grow, at least to keep up with inflation or pretty close, right? And I get that in the insurance contract. A fun little fact is the cash value in my life insurance contract must grow to equal the death benefit. It's contractually guaranteed. This is a legally binding contract between me and the insurance company that says my cash value must grow to equal the death benefit, right? And why that's important, Russ, is the market, we're in a time where the market just a few days ago took a huge nosedive, right? Huge dive. People lost, I don't know what the number is, 3, 5, 8% of their potential life savings if they had it all stored in the market. Guess what? My cash value, all of my insurance policies, they grew yesterday, they grew today, and they're going to grow tomorrow. It's contractually guaranteed that it's going to happen, right? And there's safety for me within that growth. I wanted to store my cash somewhere that was safe and I would get some sort of return on when I wasn't using it in investments, like Joey alluded to. Once we were starting to build passive income, I wanted to store somewhere where it was safe. And these insurance companies, you mentioned, Russ, are 120 years old. The ones we work with are at least 120 years old, have been around an extremely long time, and they're backed by billions and billions of dollars, right, that they have, that they invest in, that they use. And so I feel extremely safe in my whole life insurance contracts when I'm storing capital there within my world.
No, that's so good. So good. How about for you, Stein?
So for me, I think the critical part of the actual vehicle itself, the policy, the whole life policy that you're speaking of, is that it drastically increases your ability to build a legacy. And what do I mean by that? I'll give you my personal example. Before I learned about this whole process in this vehicle of infinite banking in whole life insurance, I was putting towards term policies for my family of $2 million. Those things would have run out, first of all, in less than, I think it was a 20-year term is what I had at the time. So $2 million death benefit. That was actually at the time, I don't know if you remember me, Russ, but I was kind of proud of myself. I was kind of like, man, I'm like dad of the year right now.
Which, by the way, that's 15 years ago. So if you had a 20-year term policy that was already in force, that was like a 2 or 3 years old at the time, we're saying here in the next 2 years or so, you would have no longer had that term insurance.
That is 100% correct.
Okay,
yes.
Keep going.
But we're talking $2 million was a lot of money back then for my stage of life and everything else. And then when we started to implement this process and looking at the vehicle of whole life insurance, when we reverse engineered my need for cash in this process, it ended up buying me over $3 million of death benefit.
What do you mean by that?
So when I started to say, hey, I need to be gathering this cash from all these other places that Jamie mentioned, my 401k, my IRAs, my 529 plans, everything where I was putting cash before, I started to basically bring a magnet back to my own system, this infinite banking and this whole life policies. Within the first year, I had over $3 million of death benefit that came when I solved for my need for cash. Well, now, fast forward, that number is well over 10 million. Now, that to me gets me excited because this makes it a perpetual system. That means when I do graduate, as Nelson Nash used to call it, when I do pass away, I have at least 5 times the amount of death benefit that can go to the next generation. And to be honest, it's probably an infinite more amount because I would have never even had the term policies pay out. So that to me is really, really important about this.
No, I think you're 100% right. Has anything happened in your health over the last 15 years since when you started your first whole life policy as compared to when you had those term policies that were going to expire in 20 years?
It sounds like you may know me more personally, Russ, but absolutely. At this point, I am still insurable, but at a much worse rating. And to be honest, probably when it comes to term policy into the 30-year terms at this point, probably would not be able to get that coverage.
It would be too expensive and probably not something that you would want because then you would start making the discernment between what is my cash able to do. I think there's so many parts here. So what we've tried to do in a poor way, right? You're listening to this podcast and there's no way for us to take a subject matter as deep as infinite banking, something that was written in a book, an 85-page book that Nelson Nash would actually do a 2-day, 10-hour workshop and us try to cover it in 25 to 30 minutes and do it true justice. And I'm not trying to expect you to say, if this is the first time you've ever heard this is absolutely a game changer for you. You have to do it immediately. That'd be bad advice, right? Because I don't know your situation. I don't know if you can apply this into your situation. I don't know how or what your goals are. And I think the key is that each one of us are sharing from a perspective of what we've done in our own life, that we've seen how this has transformed our personal finances. How has this gotten us closer to more of what we want and further away from the things that we didn't want? If you are trying to figure out, does this apply? 2 options, right? Like safety of your own computer. go to what'swhatwallstreet.com/IBC. Watch a webinar, right? Like get a little more insight. If you're like me, maybe you want to read the book. You buy the book, Becoming Your Own Banker. You can go to what'swhatwallstreet.com. On our website, we actually will point you directly to the specific book, or, I mean, I'm sure you figured out Amazon at this point. You can do that for yourself. Read the book. Read through some of those things. Challenge some of the internal thoughts. It's so much harder to unlearn stuff. I know this personally. I was professionally trained to not do these things. I was the one telling people not to put money in these things because of all the mistakes and the myths that I thought existed around this. But, you know, to be honest, I just got finished paying I own a lot of different whole life policies, and I was paying one of the premiums here recently. And I was sitting here and I was thinking, you know, how has that insurance policy performed as compared to predicted? And so I'm going to end you with this. So if you're watching live on YouTube, if you're listening to the podcast, go to YouTube, fast forward to the end of this podcast, and you can actually see this example I'm going to share. I was going through some numbers with my own stuff yesterday, and I noticed that, you know, when I was sitting here looking at what is the cash value of this insurance policy. And the insurance policy I have is kind of broken up into two components. One is what was going to be the guarantee that was associated with the death benefit, and what was associated with this additional thing, this paid up additions rider. And that's something you'll learn if you start reading the book, you start building out and designing an insurance policy for yourself. You realize that there's two components to it, and they both serve a purpose. And I noticed that one of them had a guaranteed cash value of $71,317.55. Now, that means nothing other than when I first started this insurance policy 6 years ago. 6 years ago, the illustration told me that my guaranteed cash value at the end of 6 years was going to be $71,318. And I thought, that is fantastic, right? Like to look back over all of this time and realize that my numbers of what I'm experiencing is exactly what I expected to happen. Now, how many times have you ever put money into anything and 6 years later, it is the exact experience that you expected? Not anything I've done, right? Some things have done better. A lot of things have done worse. Well, the next thing I looked at is my cash value on the non-guaranteed side of this equation has $268,824. I looked down to see what did I expect it to be going back to my example from 6 years ago. An example that was static, could not improve. It could only be what it was expected at that time. It was $272,000. That is a 98.5%, a little higher than that actually, actual result compared to what was predicted. And so if you compare those two numbers, you will see that I'm over 99% of actual performance compared to what was predicted 6 years ago. And this is the part I love about this, is that infinite banking is not about how you're going to build a massive amount of wealth and it's going to, earn hundreds of percent. It's going to, create all this stuff for you. No, infinite banking is a process that's going to make you think differently about money. It's going to help you recognize that your need for cash is way more important than your need for death benefit. It's going to force you to think about the fact that everything we buy is finance, whether we pay cash for it or we borrow someone else's money. And we need to be in the banking business. It's going to tell you that the best tool to do all of this is a whole life insurance policy with a dividend-paying mutual life insurance company. Because when you save cash there, it's going to be there when you need it. And I can prove to you through an example, the live example right here, of 6 years later, 99% of what I predicted to happen happened. And if this is the place where I'm storing cash so that I can do all those things that these coaches talked about, I don't know how to tell you. I have more certainty in the future than uncertainty. Do you have the same in your life? If you don't have the same, I'm calling you to action. Get on a call with one of these coaches and talk to them and share your story. You can do that with a free call. Go to what'swhatwallstreet.com/free call. Gentlemen, thank you so much for sharing. I hope that we did a decent job of covering a big topic in a small amount of time. I hope you found value. Come back to this podcast. Come back to our YouTube page. We'll continue to try to educate you on ways to become a better investor, ways this subject matter can help you get closer to what you want, further away from what you don't want. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.